It's 2005, and George Economou is doing a roadshow in the lead up to the initial public offering of his company DryShips. It's not open to the public, but someone in attendance calls newsletter author Catherine Welling afterwards to tell her he could not believe what he was seeing. Shipping is a notoriously dirty business, but this was something special. Some context. Economou had previously sold $175 million of 10-year bonds to finance a company called Alpha Shipping and then defaulted on the bonds in just a year. Even better, and this is where Economou shows he's not just cutthroat but cunning, as his 2 MIT degrees attest, after a bank purchased most of the bad debt from the original holders for pennies on the dollar, he was able to buy it back for just 37 cents on the dollar by selling off a few ships. The bond buyers lost their $175 million, but somehow Economou mostly hadn't lost his business. Now back to the roadshow. It's taking place just 5 years later. All the same players from the bond debacle have representatives there, and somehow everything is forgiven. The informant described it as a room full of portfolio managers being led like lambs to slaughter. Even better, when someone asked why he was doing the deal here, now, he actually said basically, because Americans are the dumbest investors around and there's lots of liquidity in this market. So really, what eventually happened with DryShips was the only thing that ever could have happened. DryShips did great for a while. Such is the way of all shipping. It goes boom, people build a bunch more ships, then everyone goes bust. At least the financial crisis of 2008 and 9 was a good excuse. And DryShips survived. Barely, but it remained listed on the NASDAQ as a microcap. Time passes. I'm sure plenty went on in the subsequent 8 years, but whatever it was pales in comparison to 2016 through 2019. Like and subscribe, and maybe someday I'll be able to do a full documentary. Anyways, this is one of those times where, from the outside, it's almost easier to be impressed than horrified. Economou turned DryShips into a money-making machine, but only for himself. First, you have to understand that DryShips is just the public portion of an opaque group of entangled businesses. For example, Cardiff Marine is the management company for DryShips operations, and Drybulk SA is the broker. And it just so happens that Economou owned 70% of both Cardiff and Drybulk, while the other 30% was owned by his sister. Large portions of DryShips itself are controlled by both his wife and ex-wife, and of course, this is mostly done through holding corporations domiciled throughout the world. In November 2016, Donald Trump is elected president and shipping stocks go crazy. There seems to be belief that infrastructure spending that he's promised during the campaign will lead to the long-awaited next boom in the shipping industry. DryShips stock takes this momentum to the extreme. It goes beyond parabolic. In a week, shares increased by over 1,500%. StockTwit's messages about the company increased to a rate of 17,000 per week, about 4 to 5 times the interest shown in stocks like Tesla and Apple. In this moment, Economou sees opportunity. Why not use the company stock as currency and raise funds? A shadowy company called Kalani enters the picture. They're willing to buy shares at a discount to the market in pretty serious size. Since these shares are purchased at a discount, if they can manage to unload them quickly enough, they can turn a profit on the difference. Economou sends $100 million worth of shares to Kalani, who immediately dump as much as the market will handle. Shares collapse since even at the November peak, the company's entire market cap had only been 80 million. Before the run-up, it was only worth 5. Apparently, this felt good because Ekonomu does this again and again, decimating share price. Day traders and a group of longer-term investors somehow deluded into believing that the dilution will stop any day now and the company will return to normal operations, keep eating shares from Kalani. Heinrich Alex of Seeking Alpha is on the DryShips beat and represents this worldview. He appears to embrace entering a position with his eyes wide open to the risks. His commenters feel the same. They call it a gamble, but they think it's one worth making. The Wall Street Journal runs a story speculating on the same. In theory, the collapsed share price combined with all the funds that had been raised could make for an interesting opportunity. Ultimately, though, it concludes, buying DryShips represents the triumph of hope over experience. At least in 2005, it had been bankers being fleeced. This time, it was retail. As shares continued to be issued, DryShips had to execute reverse stock splits in order to maintain a price above $1 so it could remain listed on the NASDAQ. Prior to the November run-up, it had gone 1 for 15. Then it quickly followed with 1 for 8, 1 for 4, 1 for 7, and 1 for 5. This meant that for each 16,800 shares someone held previously, they ended up with 1. Splits aside, here's what happened to people on a dollars basis. A $10,000 investment in DryShips stock at the beginning of November was worth $167,000 2 weeks later, but only about $2 by the summer of 2017. Now for the good part. How is Ekonomu benefiting from all this? It's his shares too that are being devalued, right? Yes, but remember, from his perspective, DryShips is just one piece of a Frankenstein's monster of related parties. If he can get the $550 million that was raised by DryShips through Kalani to any of his other entities, he no longer has to share it with all the degenerates posting on StockTwits or contrarians on Seeking Alpha. And you don't graduate from MIT without being able to solve that puzzle. First of all, there was lots of DryShips dealt being held by Ekonomu-controlled companies whose interest can now be comfortably paid. Second, Cardiff, the management company held by him and his sister, could continue to receive payment to take care of the fleet, a fleet which was growing because of the purchases of additional vessels he was able to make with the new money. And the cherry on top is that some of these newly purchased ships were from Ekonomu's private holdings, which had built up previously by buying from DryShips in the first place at discounted prices when the company needed cash. DryShips was like a person who needed to be kept alive just long enough to be stripped of its organs. Eventually, Ekonomu came for the head too. In 2019, he made an offering to take the company private. The price he offered was assessed at below the net asset value of the company, although not egregiously so, but that didn't really matter. He had special super voting shares which guaranteed his success. Of course he did. Heinrich Alex wrote the final good riddance to the company on Seeking Alpha, and the comment section gamblers, forced out of the casino and into the light of day, paid their last disrespects. Watch Kid captured the sentiment, writing, "George Ekonomu is a thief, and I wouldn't be surprised if honestly he was killed in the very near future," while user 480-76686 captured the man. Ekonomu will go down in history as someone who will do literally anything to anybody for money. George Ekonomu is a shipper. He slaughters sheep for a living. Thanks for watching, guys.